I'm farming this in a similar way as I did with the usual season one, where I'm just kind of like syllabling YTs across a lot of wallets with relatively small buys that I've gotten through limit orders. So yeah, I mean, I think it's an interesting strategy. I do think like taking the other side of it and getting 16% fixed rate for the next 78 days on stablecoins is also pretty appealing too. So
Yeah. I was making some faces. Like, so I was trying to see if this was a efficient market, and it is. So S level USD is at 14%, but it gets half the points, right? So at half the points, you would think, okay, well, it's like roughly 8%, kind of discounting the symbiotic. So 8% here, you would think, okay, well, there's probably a 6% underlying yield, and there is. So actually a relatively efficient market. Pricing the points from a 20 XP multiplier at roughly 8%, and then a 40x multiplier at 16%. So one of the fun things about Pendle that we've mentioned before is that like it helps you estimate APRs for your points activities, which has been kind of fun. Welcome to the Dojo pod. It is March 11th, 2024. Hard to know what day it is in the blur of the price action. Yes, we are down bad, tremendously. I think last week I may have used catastrophically bad, and now this is worse. So I need a new adjective, or clearly I need to reserve my negative adjectives for more extreme days. So, I could ask how you're feeling, but obviously it's not good. The question we posed last week was, are there any indicators that you would use to tell you that we're in a bear market? Now, I think we have, if there were indicators, we probably have more confirmation this week. That isn't to say we are in a bear market, though. I think we have so many confirmations that we're in something. Where do you see us?
well, bear market, we throw around all these terms, and I think they have different definitions what people mean. It's kind of like recession. Like recession does have an absolute definition of like negative growth in the economy over 2 quarters. There probably are people that have definitions for exactly what a bear market is in,
Yeah,
say,
like an
Bitcoin.
equity that has a 20% drop or something in some short amount of time. But like, clearly you couldn't use that in crypto because we get 20% drops on a Monday.
Exactly. That's exactly what I was going to say. So, I mean, it's painful out there. That's what I would say. It's pretty brutal. The chart does not look great. I mean, what do we're hanging in for dear life at 80. We definitely went significantly below. What was the lows here? Like 75, 76?
Yeah, well, we had to hit the Pippin level, right? We had to hit where Scottie Pippen predicted we'd hit it on March 7th or whatever. You see that tweet?
Yeah, I did.
Scottie Pippen was like, I was in a dream again, and Satoshi Nakamoto was there, and we were in an elevator going down, and he had 76ers on his jersey. What does it mean? I don't know if he has insider information or like if someone's feeding him something. It is weird, certainly, but
Has he had a confluence of calls like this, or is this just
he
a
also said something like that back when Bitcoin was really low, he was like, in the fall of 2024, I just had a dream that Satoshi said 100K, and then we hit 100K very close to when he had predicted it. So like this is not the first time he's had a stranger than fiction prediction about price.
prediction?
Yeah, you like that?
I do like.
So I don't know what's going on. I have no idea. For the conspiracy theorists out there, he does wear the number 33 on his jersey. So, get crazy with it. But yeah,
That a significant number? Is 33 says
You need to become a conspiracy theorist. You are.
I know, I don't wear enough tinfoil.
So far out of the know. Yeah, I'm not even going to tell you. I'll let you look it up on your own. I'm not going to waste time with that. That's like
okay.
Baby conspiracies.
Okay.
Gotta stuff your game up. So, anyways, apparently go follow Scottie Pippen.
Can we look at like a daily chart? This is hourly. It was a little bit thrown me off. Like what all's happening?
Yeah, I was looking at the minute before.
That looks good. Pretty flat. Oh
yeah, no, look at that. We're doing great. Look at this. What bear market? So yeah, I mean, yesterday, personally, as you guys know, I have leveraged long positions, which we should talk about too. By the way, don't have leveraged long positions. So we had a very long discussion yesterday in the Discord. And it was pretty much a clinic where I was the idiot talking to a bunch of very, very intelligent hedge funds, family offices, trading shops, and they were sort of giving their thesis on how to trade. And all of them unanimously said, like, no, you would never do leveraged directional trading. Like having some portion of your portfolio as directional is totally fine, but you only use leverage for hedging or capital efficiency. You don't use it for directional trading because over a long enough time horizon, you will get wrecked, and that therefore it is negative EV. Now, you asked me, like, why is it negative EV? Do you sufficiently agree with my thesis there? Or not even my thesis, but like what you read?
No, I totally agree with it. I mean, I don't use leverage to go long in a direction. I had just heard you saying this like in absolute terms, and I was just trying to tease a
Explanation.
kind of more concrete, explanation out of it. And I think it does make sense. I mean, first of all, the cost to leverage is very high, right? And like typically what we see in crypto is like, very fast price action to the upside and then grind down. And then pretty fast move. And so if you lose the period of like fast appreciation and you just like, if you're leverage long for like these very kind of isolated periods, you obviously do very well. And like, traders are good at that. Maybe some traders are good at that, but if they can get those periods with some amount of leverage, obviously they do phenomenally. I think your average person would really struggle to get those things, and then they're trying to use leverage during these down to choppy periods where it's costing you a lot of money and it's very easy to get washed out. So that's always been my thesis of doing it. I think we got some kind of more eloquent theses in the dojo yesterday. Do you want to kind of dive in a little bit more on what some of these smarty pants were saying?
Yeah, I mean, I'll try to give. I'm gonna butcher it, but it's always good to like teach what you've learned because then you kind of remember it better. The basic idea that I think like arose consistently was that most big firms they're looking for like where they have an edge, and most firms have an edge relative to, man, what were they saying? What's that? It's not EV. There's that other term that they used, Sharpe ratio, which is like. Man, do you understand Sharpe ratio? The basic idea that I got was like there is something you have to compare yourself to, and then how predictably you can beat that, and how predictable it is that you can, or how well you did against that. If you want to backtest using Sharpe ratio versus like how well you can predict that. I know there's a better way of explaining it.
It's basically just like the risk curve. It's like for the more risk you take on, the more compensation you should receive, and like comparing yourself to, for example, like a S&P 500 or some other index, like is kind of like the base rate. You should always be outperforming that. And incrementally, the more risk you're taking on, you should be outperforming it even more and more, right? So it's not, like the whole thing about risk is it's not necessarily bad to take on risk, but it's bad to take on risk when you're not being adequately compensated for it.
Right, exactly right. Yeah. So if you have like the same Sharpe ratio as the S&P 500 and you can somehow go up the risk curve with the same degree of reward proportionate to that, then that's fantastic, right? Why wouldn't you do that? And if you can do better than that with that ratio, it's even better. So, but like, most people do compare themselves to like the S&P 500 or at least like Bitcoin, and you have to outperform that to be doing reasonably well. And yeah, I mean, no one uses directional perps or leverage unless they're, again, hedging or just for capital efficiency. There's been tons of like opportunities throughout these markets, whether they be delta neutral airdrop farming, stablecoin farming. PTs are really popular, but all these institutions, they're just looking to like beat the S&P 500 consistently. They're looking to knock it out of the park for a couple of years, in a row, and then maybe be able to sit on their laurels for a year during like the absolute worst parts of the bear market. I mean, we had like 5 different either, again, hedge funds, trading shops, or big LPs in this conversation, and it seemed like none of them were like in a totally directional portfolio. There was one guy in there who was a bit of a whale, and he was like, "Yeah, I'm all directional. I don't mind if I lose it all." And I think, okay, well, you're not the kind of trader that we're probably looking to emulate. I know it's surprising.
It's clear. What he said was, his crypto portfolio was long, but he is not solely exposed to crypto. So like there's a gradient of these things, right? And so if you are someone who is solely or primarily exposed to crypto, being only long and only levered long is just an extraordinary amount of risk. You know what I mean? Like there's a lot of risk that goes on to just like, the idiosyncratic things that can happen in crypto, and then also just like what's going on in the general macroeconomic situation. And you're having that, a huge amount of like beta to the stock market because you're in crypto, and then you're putting a multiplier on that with the leverage you're adding on top of it. So yeah, I think, it's definitely a very interesting discussion. I would say, Stephen, obviously your area of expertise and the place that you have edge is to squeeze out yields, right? I mean, to be able to find very compelling high yields during a bull market, and then to also be able to find good risk adjusted returns during a bear market. So, it seems like that's kind of like certainly your area of edge. I do just wonder, like, there is a part of crypto which like is this like dopamine thing that we get, and I wonder if you will miss that, or if you will have some portion of your portfolio that you'll be doing, even if you are just farming stables and RWAs and all these things, if you will still have a small portion of your portfolio that will be doing degen stuff like being long something or farming some scary protocol. What do you think?
Yeah, I don't love being long on like high beta assets or like altcoins. You kind of know that about me. I mean, during the beginning of the bull market, I was doing some Uni V3 LPing with like Pendle ETH, Frax as ETH, Link ETH, and that was kind of like as far down the risk curve as I really wanted to go in terms of beta exposure. And for worse or for worse, been mostly sitting in ETH, and then like I guess kind of more recently BTC for the past like 2 months or so. So I'm already relatively risk off because alts tend to correct. I do think that there's where we are in the .com like bubble phase, and 99.9% of these governance tokens are going to trend towards zero. Even if they become prime pieces of infrastructure of the future, just because they're crazy overvalued and like the PE ratios are nuts and make absolutely no sense. So I think like ETH, it's here to stay. I've even explored some bear cases for ETH. BTC makes sense as a store of value, even if it is down 30% or whatever from all-time highs. It does obviously, like if nation states around the world are looking into having it as some sort of strategic reserve, they're at least like giving some legitimacy to the idea that the economic model behind Bitcoin has some robustness to it. So yeah, I will definitely continue playing with stuff. I think that like having long exposure is not terrible. I think, well, actually, I know that one of the LPs that you and I know has like 30% long exposure, and then 70% of his portfolio is delta neutral. And that's a pretty comfortable spot to be in, because then let's just say we take a huge 30% hit, right? So what's 30% of 30%? That's 9%, right? So he's effectively taking a 9% hit on his portfolio rather than a 30% hit. And I think he's not terribly torn up, because he's made way more than that in just stablecoin yields throughout this market cycle. So yeah, I think
he to be clear, he is not just sitting in stablecoins. He's got like a huge mix of alts, of majors, actively farming where he's like where the opportunity is, and then is always happy to like to neutralize the delta of Bitcoin, of ETH, of whatever asset he can kind of get a good yield on. So I do think that strategy makes a ton of sense. Like there is always inefficiencies, not always. Like we live in a market of DeFi where there's dislocations in the market constantly, and I think if you're paying attention and you're have the time to kind of take them on, there are always just like super interesting things that can pop up. Stablecoins depegging, yields that seem like they are offering asymmetric upside consistently over years and years and years period of time. If you're paying attention, there have been opportunities that you can kind of go out there and get.
Yes. I mean, we could just look at the usual airdrop, right? You were really early on that. You made a big case about it. You were like, shaking your shield in the dojo, telling people to jump in on it. And many people ignored you, but some people didn't. I think probably it was, interestingly, some of the larger LPs that listened to your advice. And that airdrop, you could have doubled your principal in many cases from that airdrop. Yeah, there was a depeg, but if you farmed the airdrop leading up to that, you probably didn't mind too badly. And if you hold for 4 years, it'll repeg. So like there just have been some really big home run opportunities recently, and we're always looking for them. So like that's the kind of fun part, the kind of the takeaway that many of us are aiming to have a large enough portfolio to be comfortable running a larger stablecoin portfolio. I know there's a lot of people who follow me that are still in like the 4-figure portfolio, 5-figure portfolio, that, it would be demoralizing for them to hop all into stables, because then like, okay, well, cool. But also like, if you're just building this up, it is so much better than a savings account, right? A savings account, if you get the best savings account in the world, maybe 3 to 5%. And that's like the, genuinely, you have to really go crazy for a savings account that can perform that well. Aave, right, outperforms virtually any off-chain savings account. So like the safest thing in DeFi outperforms a basic savings account. And then you can typically outperform by 4 to 10-fold with relatively risk-adjusted places. So, you know, even for small accounts, I do think there's a serious argument for running a similar sort of portfolio also to practice, right? Because as you grow that portfolio, you will want to know how to do more risk-adjusted like investing and playing on chain.
Yeah, it makes a ton of sense. I mean, my strategy has always kind of been having a relatively mixed portfolio. So having always an allocation to stables and stablecoin farming, you know, having primarily exposure to the majors and farming those. I never use leverage, but BTC, ETH, some Sol, very kind of a small allocations to altcoins. And then, you know, I do participate in, you know, as an angel investor in things as well. And so that's kind of like my barbell. It's like stablecoins and majors on one end with doing, you know, farming those. And then on the other side, like where I really take risk is kind of altcoins essentially. But it looks like you have a snazzy chart.
Yeah, I forgot. This was not, I didn't intend to show this. Someone was, what were they doing? They were telling me that we could be in a reaccumulation phase, which is like, I wish this was the chart. There we go. Let's just have that be the chart. Like something like this where you have a long grind down, you know, maybe long grind down after something, and then eventually it breaches some stuff. I don't know. If you're like into Wyckoff stuff, this is a Wyckoff reaccumulation. This is one of the sort of, you know, rumors floating around that we're in a Wyckoff reaccumulation phase. People are, you know, trying to get another chance to buy ETH before some sort of big thing happens. If that's the case, that'll be fantastic. Who am I to tell you guys? I did not intend to show you guys this chart. I intend to show you the ETH price action. If you are bored, right, and you are feeling down bad, one of the more fun things you can do now with the price is like look at the date and think what happened in that year. 1925, right? World War II hadn't started yet. 1925, roaring 20s, right? So F. Scott Fitzgerald probably doing cocaine in the back of some party somewhere. Great Gatsby vibes. So that's fun, right? So don't be down on your bags. Is that? I mean, earlier today you were saying we were in the Prussian Wars in the late 1800s. So I mean, I know vibes are down, guys. I know, like, it probably hurts. Most people are allocated long. Actually, not true. I saw a survey recently, and most response actually were in stablecoin. So that actually that made me feel better. Also, my stablecoin threads do better than any of my other yield threads. So I think that we may be late to exiting the market this cycle. And it gives me great joy to know that people are sitting in stables, farming stables, and like enjoying those sort of stress-adjusted yields because it's such a calmer portfolio to be in. So let's actually dive into some yields. I know we've sort of waxed and waned here a bit. Maybe if you guys want to have some catharsis, I'll show you my FFX leverage later here. I didn't get liquidated, right? Because they don't do liquidations. They do soft rebalances, but those positions look terrible for obvious reasons. Let's go to Pendle. Pendle markets still at 17 fixed rate, fixed date, but you can't really enter SUSDE Bera because these Bera vaults are closed. Boyko vaults are closed. Now there are some exceptions, like you can buy the Bera receipt tokens for some of these assets, like the liquid Bera BTC, liquid Bera ETH, and you can buy those directly from like Uniswap. So, well, not directly from Uniswap. You buy them from an LP of someone who's LPing those things on Uniswap, and you'll need the contract address probably to get it. But if you're like Dex Screener, you can literally type in liquid Bera. Actually, I'll show you guys. Liquid Bera. I don't know, like if you I don't know who's interested in this. Oh, look at that, $209,000 of volume on this much liquidity, and this is a 1% fee tier. That's amazing. That means that the average liquidity in here made more than 1% ROI yesterday. Good for that person, because I know that person. We know the people running these LPs. That is awesome. That makes me so happy. So anyways, these LPs, this one obviously doing better than this one in terms of yesterday's volume. Great. I mean, APRs. Let me not dilute this person. But you can go and you can buy these tokens if you want to participate in the Pendle LPs. That's the only way you can get them is by purchasing them. You can no longer deposit into the Boyko campaign. Anywho, so that's at 17%, but you can't really participate in it. Level, this is 16.21%. That gets you 40x points multiplier, 1x symbiotic multiplier. I think only on the addressable capital within it, that is like symbiotic parted. And they're saying that's worth 16%. So this is no intrinsic yield. 16% from just the level season 1. Now, I have been a level bear. You are a level maximalist. You think level is the greatest protocol ever invented, and you've been shilling into it. I'm kidding. You have a less bearish take on level than I do. Can you explain sort of like why you see this as a reasonably interesting stablecoin opportunity?
Yeah, absolutely. I wouldn't say I'm a level maximalist, but I
I
have
know.
chatted with the team, and I do think that they're very capable. I think that they're doing some interesting stuff. They originally were trying to be kind of like a stablecoin issuer. I believe that was really focused on restaking and allocating to Eigenlayer and Symbiotic and all these kind of different places where, you know, 8 months ago or something like that, it really looked like restaking was going to be this kind of like sustainable long-term yield with lots of demand. Unfortunately, it's turned out that there is not a lot of demand from people who want to buy the like restaked asset yield. And so I think that they've been diversifying. They're still obviously in Symbiotic, but they're also allocating to stuff like Aave. They have the similar kind of model. I don't know what the word for it is, but like the similar model to Athena, where you have some stablecoins that you could just get the yield on and some that get more points. I think that's pretty effective. They also have a lot of the same VCs involved as in Athena. So you have, for example, Dragonfly, which is, for those that maybe are on crypto Twitter a lot, Hasib is the one of the head honchos at. They also have Robot Ventures involved, which is like Tarun and Robert Leshner. So they have a lot of like kind of smarty pants backers. The team seems to be, very capable, coming from kind of a TradFi background, very good understanding of like what makes a good stablecoin, how to think about kind of like adjusting risk when it comes to stablecoin yields. So, I think that they are an interesting option. They are still in their kind of season one, which is kind of one of the things that makes me the most bullish. Projects that do get hype and do get good listings in their season one tend to perform very well in terms of like the airdrop that people are getting. So, I'm farming this in a similar way as I did with the usual season one, where I'm just kind of like syllabling YTs across a lot of wallets with relatively small buys that I've gotten through limit orders. So yeah, I think it's an interesting strategy. I do think like taking the other side of it and getting 16% fixed rate for the next 78 days on stablecoins is also pretty appealing too. So
Yeah. Sorry, I was making some faces. Like, 'cause I was trying to see if this was a efficient market, and it is. So S level USD is at 14%, but it gets half the points, right? So at half the points, you would think, okay, well, it's like roughly 8%, kind of discounting the symbiotic. So 8% here, you would think, okay, well, there's probably a 6% underlying yield, and there is. So actually a relatively efficient market. Pricing the points from a 20 XP multiplier at roughly 8%, and then a 40x multiplier at 16%. So one of the fun things about Pendle that we've mentioned before is that like it helps you estimate APRs for your points activities, which has been kind of fun. Overwhelmed trying to manage your crypto and DeFi investments? Try iYield, a free financial planning tool for crypto natives and yield farmers. iYield reveals your full financial picture by also supporting debts, incomes, and expenses in both crypto and fiat. iYield supports a growing list of over 16,000 tokens in 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that it is 100% free, anonymous, and there are no ads. Check out iyield.com to take control of your financial future today. We should also EUSD came out of nowhere. I kind of look at the stablecoin PTs as a horse race, and it's fun to see which ones are in the lead, like which week. EUSD really struggling last week. It was like down below the top 10. Now it's number 4. So EUSD back up there. As a reminder, EUSD is ethereal USD. So it's Athena's perpdex platform. It's going to have its own token. I think like the ethereal token, you get a 1.6 last time I checked X multiplier on the ethereal points plus some ridiculous multiplier. Yeah, 50x sats multiplier. And that airdrop is not going to have any vesting. We talked about the importance of that last week. So won't rehash it, but it's fun to see like what sort of climbs the narrative ladder to get a little bit more supremacy this week than previous weeks. For example, like right now we have wrapped staked SCUSD, which previously was nearly 20%. Now it's a modest 13.49%. Granted, 13.49% for mostly Sonic points and then Sonic point derivatives like rings. Veda, no one knows anything about the Veda airdrop, but a shout out to the Veda team. They built cool vol infrastructure. 12x Sonic multiplier, which is the typical Sonic multiplier you get for using any of the Rings assets in DeFi. And then, 2x Rings. Rings just entitles you to even more Sonic points at the end of season 1, maybe season 2, who knows? 13.49%. Now that's interesting because just recently, I don't know how recently, but pretty recently, you were allowed to take these ristic assets over to Silo. I know you guys probably can't see that because it's super unzoomed. Boom, there we go, super zoomed. Yeah, let me go one. So you have the PTs for wrapped staked SC ETH, which I think has like an implied APR of 6% or something. And you can borrow ETH against it. Oh, interesting. That's a deposit APR. What's the borrow APR? Borrow APR is 4.6%. So you also have I think there's USD one. So this we just saw, 13%, borrow cost 10%, 3% arbitrage. And let's go see what the LTV is. So max LTV, 87%. For those of you who don't know how to figure out max leverage, you do 1 divided by 1 minus LTV. That's 0.87. That's 7.7 leverage. So 7.7 times 7.7 times the collateral, which is 13. Oh my gosh, I can do this. 7.7 times 13 is 100, and then you have to net the borrow cost. So minus borrow cost was what? 10. 10 times 6, 60. So 40%. There we go. 40% is going to be your net APR here. You're not going to get points, but you're going to get 40% on USD. Granted, PTs are variable. This is it's like 76 days out position, and borrow rates can be variable. So do keep all that in mind, but it is cool that finally there's a place to loop PTs on Sonic. So I'll say that.
I think it's very cool. You also do seem to get some points, like some Silo points. I'm not 100% sure what those are. And then you do get some sort of Sonic points as well.
Where do you see that?
If you clicked on go back into the market, and I think it says deposit is 1 Silo point per day for depositing.
Oh yeah, look at that. You get 1 Silo point per day. These are gems. I think so. The Silo points entitle you to their gems.
Got it. And then also, it is a 87% max LTV, but liquidation threshold is not up until 92%. So it gives you a nice little buffer there.
Which is nice.
Yeah, that's pretty nice. And then, I think the only thing we didn't talk about here is what kind of oracle it is, which would make a very big difference. Custom oracle.
Is there that redstone that feeds the value to PT asset in USDC? So it's a Python oracle for this, and then a redstone oracle for that. We'd have to look at the Python oracle. Python oracles are frustrating.
And by Python, you mean Pyth, right?
Pyth, yeah. Not the language.
Anyway, I would just say people should go take a look at that. I just sent you a link here, which is kind of a new, interesting stablecoin play, which I've been looking at.
Just with Helena.
The Noble one. Yeah. It's kind of an interesting thing, right? So it's they have this new stablecoin, which is essentially just an RWA, earning 3.5-4%. They're using M0 protocol as kind of the underlying RWA tech. So you can just go and you can deposit your USDC into USDN, which is their new stablecoin, Noble Dollar, and you can do some different stuff with it. So one is you can just go use it in DeFi. It's not super integrated into a lot of different places yet, so there isn't a ton just to do with it if you're just holding it vanilla. Then there's other stuff you can do with it. So first of all, let me just give a little wrap up of what Noble is. So Noble is kind of the native issuer of USDC in Cosmos. I think they have over $500 million of USDC that's been minted through their chain and then goes out to all these different places, notably DYDX. DYDX uses 100% USDC, so there's actually quite a bit of demand there for the asset that they're producing. But now they have this point system for their new stablecoin, and you can have this kind of choice that we were talking about, similar to Level and Athena. It's this kind of mechanic that's been popularized in a bunch of different places, but they do have some twists on it. So one, you can go take your Noble Dollar and you can go and just get yield. And basically what you're getting here is if you deposit into the boosted yield vault is you're getting the 4.2% that you would naturally get just from the RWA yield. And then you are getting an additional 11.8% from people that are foregoing their yield. So you're basically getting the yield from the people that just want points. And the people that just want points are depositing into the
levels. Did you say that already?
Yeah, exactly. I did say that. People that don't want the yield and just want the points are depositing to this other vault, which is the Noble Points Vault. There's $10 million in here. And so there's $10 million of people that are foregoing their yield compared to only $3.7 million of people that are getting the yield. And those people, are saying no yield for me. I only am really long Noble and I want all the Noble points. The interesting thing is the way these points work is it's depending on how long you were deposited.
Right.
So if you were deposited for below 30 days, you get 0 points. So this launched like within a week ago. And there's $10 million that's not earning any points whatsoever right now, and will only start earning points, in the next, say, like 3 or 4 weeks roughly. But then for each month out that you are in this vault, you will get a higher multiplier. So starting within the first month, you get 1x, second month, 1.25, and then so on forth up until 4 months, 1.75. So I don't know. Some people are really long Noble. They like the team. They like how close they are to Circle and the asset issuance side of things. I have no idea. I don't love the like no points for the first month thing. I do think the longer you're deposited, the more the multiplier piece is kind of cool, but don't love that you have no optionality for points within the first month. What I do like is I love these kind of ways to get, decent yield. I would say 16% is pretty decent, especially if you consider the risk. The risk being Noble's a very trusted stablecoin issuer connected to Circle. And then also you have instant liquidity. So you can hop in and out of this at a moment's notice, and you can be getting your 16% paid to you in yield daily, right? So that's pretty nice. It's kind of similar to, for a long time, I was farming fluid stables because you could just like deposit there and withdraw at any time, and you were getting, it was like 25%. So it was better back then. But in a bear market, 16% for instant liquidity on your stablecoins, I think is pretty good. Different than a fixed date, fixed yield thing. So like, kind of you're locked in, but you're also locked into your rate. In this one for Noble, like it might get really diluted, but you have the optionality to be able to get out of it without any kind of like major slippage or anything like that. So what do you think about Noble? Do you like that as a mechanic or not super interesting for you?
Oh, no, as a mechanic, definitely. Yeah. The whole forgo your yield for some reason and give other people real yield is cool because it allows people to sort of amplify their thesis. So if they want real yield, they get leverage exposure to the real yield of the underlying protocol. If they're points maximalist, they can get all of the exposure to points where other people are not getting it. So I like anything that allows you to express your thesis more accurately, which is why I love primitive so much. But, but 16%, I'm probably not going to, I'm not like a huge hedge fund with millions of dollars. So I'm probably not going to jump at 16%. I'll probably go for something a little bit more spicy, which is why I pulled up Contango. Now, of course, there are caveats here. I don't know. So like if you can, there are benefits, right? So if you look at Pendle, you can get 16.5% on, I forget what it was. It was SUSDE or something like, no, it was level, interestingly. Yeah. So it was level. Yeah. That is kind of liquid, right? You can enter it, you can exit it. Kind of, there is some variability in the peg because of the IOI. So if the IOI goes down, you actually exit at a faster profit. You realize more APR relative to your initial investment. But also, if the IOI goes up, you could lose principal until expiry in the interim. So there are definitely like flaws there. It's not as nice and principal protected as something like the Noble Liquid 16%. So yeah, it's good for sure. But can you leverage it? One of the things that I go back to is, and again, I know people don't like this one, but it's, well, actually, we'll show it on Contango. It's the Morpho SRUSD RUSD, because the borrow cost is like algorithmically determined to be below the collateral cost. So you've been sitting on a 30% yield for weeks now. And this is like intrinsic yield. It's not yield in points. It's not yield in emissions. It's just growth of SRUSD versus RUSD. A lot of people don't like this mechanism. I love this mechanism just because it doesn't break the system. Like there's nothing coming into circulation that is unbacked, and there's nothing going out of the circulation that shouldn't. So I don't mind it. It obviously is not going to last forever, but it's been months on end plus points, and I've liked that a lot. So when I go to Contango, I erase a lot of the options by like saying, I want to be able to invest at least $100,000. I'm not going to invest $100,000, but I want to know that, it's not going to get super diluted by the next person after me. So then we can sort of see these things pop up. We have the PT Ref Stake USO, we have PT USO pluses. Actually, we should look at that one on Euler because they just got a bunch of, they had a cap increase. And I'm sure we'll see the SRUSD. Yeah, here's the SRUSD, RUSD loop that I was telling you about, 26% organic plus points. I see sexy all over the place. From what I understand, these ones they're not consistent because I've seen them like at the top and I've seen them at the bottom. All over the place. Also, the SRUSD USDC loop just got more collateral in there, and you get points on the notional, which I think could be like another 60%. So there's a lot of good stuff happening for leveraged stablecoins. Yes, you pay a 5 BIP origination fee on your notional to enter and to exit, and at 20x leverage is like, 1% to enter, 1% to exit. Keep that kind of stuff in mind, or you can do the loops yourself. But yeah, leverage is still something that I'm interested in, especially with stablecoins, especially with like NAV or fundamental oracles. I just, being able to mitigate risk. And I think that's kind of where my head is at typically with stablecoins. 16%, obviously this is good, right? And if I was a big boy swinging around a lot of like TVL, certainly this would be one of the things I'd deposit into.
Well, I mean, like my example is like, certainly there's other higher yieldy strategies and you can kind of like make a basket of them. You can have some, like for example, the Resolve one where you're earning 20 or 30% plus points, which could be quite valuable as well.
Mm-hmm.
But those are not positions you can get in and out of very quickly, right? Like, and especially if there's like a market dislocation,
Right.
you can't necessarily get out of that and go like buy a arbitrage opportunity on some asset that's distressed or, do whatever it is that you think is pretty like positive EV. I think sitting in something like USDN, like the Noble one, getting 60%
Having some portion of
weighting.
your portfolio be, fully liquid to deploy if necessary is a great idea.
Yeah. So that's kind of like how I use Fluid for a long time and how I'm thinking about using Noble as well. It's only been around for a week, so like I haven't been convinced that it will be, sticky, that APR, but if it does end up being sticky and there's, you can get, 16 to 20%, with a high amount of like, ease of getting in and out of the position, I think that there is a place in a portfolio for that kind of position. So go ahead with
nearly 100%. That's nuts.
what is the leverage on that? Like,
No, that's the L. That's the liquidation. Yeah. So it's kind of cool. They give you, as much possible room as they, as is reasonable. The available liquidity is kind of throwing me off here. So I know they just, added $5 million of available borrow liquidity. The max ROE here, that's 38.4%, we'll say. And that's just leveraging the USD 0++ like emissions and, same exposure. So it's USDO underlying, which is really nice. You don't really get like liquidation risks, but you would of course want to be like compounding those emissions to the detriment of the token, but you can hedge that kind of if you wanted to. I think this is a cool market because it's like, they're determining the borrow APY. It's fixed at 5%. So like Usual themselves have created this market just for this opportunity. And yeah, I mean, it's cool if there's liquidity, but liquidity is not populating today. So I can't tell if it's a good opportunity or not. I will say some of the basis trade vaults got wrecked. We could talk about Resolve. Like, you guys know that Resolve has been one of my darlings. I've liked them a lot. But actually, we can look at Euler. So if we go back over to Borrow, and we'll actually go to Resolve, this shows us what the like intrinsic APR of RLP is, and I'm guessing it is, it's 8 bips, right? So RLP today, or past 24 hours annualized, is a 8 bip APR. So like any borrow against that's going to be negative. You can see sort of here these are almost all unanimously negative, except for the PTs, which are holding value because of the points. So
when you say wrecked, do you just mean like yield is down bad, or do you mean they actually lost on the principal?
Let's check. I mean, it has lost on principal before. I didn't see it lose on principal, but yeah, we should go check. So the way you do that is you open the app and then you look at the RLP. Yeah, look at that. So it did lose principal again. So 1.17 is sort of like where it was last we checked. It looks like it went down to, that's a really tiny hit, 1.1714 to 1.17126, back to 1.714, and then back down to 1.711. So on the bright side, still above 1.17. Last week it had gone as low as like 1.16998 or something.
What's the 30-day trend there?
What's that?
If you pull it out a little bit further and go to 30 days, what is it? That looks a bit better.
Yeah,
It's
exactly.
flat.
So
I mean, it is flat.
What you should know is you have the risk of principal loss, right, for RLP, whereas USR, you don't. If there's like a DPEG, or if there's, like negative funding, or if there's, leg risks in general, all of that gets eaten by RLP, which is why it has the capacity for principal loss. But in return, RLP gets, a leverage exposure to the yields. So, it's a decent chart, but clearly, like, if you were in this since the 5th of March, which is, only like a week ago, actually not even a week ago, it's been flat, right? So the past few whiles, it has been flat. And yeah, there has been like one big drawdown back in February.
It does look like there was another long period of being relatively flat also here. So it's not unprecedented. for this to happen. Kind of the middle of the chart looks pretty flat. I mean, yeah, like right in there.
I mean, yeah, or very, very low APR for sure. Yeah. So, but it's a season 1 airdrop, which I think is what makes it particularly enticing. But we're getting into that zone where things are less interesting. I mean, man, not to FUD any bags, but Kelp, they're going to be there in a couple weeks. We're going to be a month after their last TG announcement date, and I don't know what to think anymore. Like, are they just, as the Brits say, taking the piss, right? Or are they waiting for market conditions that may never come? I don't know. But some of these season 1s are taking an unreasonable amount of time, in my opinion.
Yeah, I think it's taking a long time. I don't think anyone's happy about it. My understanding is they were legitimately going to TG at the end of last month, and then the partner that they had, the sex partner they had a very major event and kind of like issue that came up with.
I wonder that.
Yeah. And that led to them having their partner postpone the TG. And so now they're trying to figure out when it's going to happen. Obviously, like, there has not been a lot of launches because the market has been straight down in a line. So, yeah. I mean, I have no idea. I want them to launch. They should have launched a long time ago. It feels like it's a combination of them being slow to the TG plus having a series of unfortunate events. So I'm a bit more sympathetic, but I do
give them the benefit of the doubt, and we'll call it a series of unfortunate events. Maybe Kelp will be the thing that saves my portfolio in the final inning of this market. So fingers crossed on that. Definitely rooting for, Kelp's built some cool stuff. It irks me that they haven't done a season 1 yet because, at some point you can't blame external conditions. And if you do, it seems irresponsible. Okay,
go ahead.
I was going to say there's BTC stuff, Contango. So BTC kind of has been showing strength. This cycle in particular has been really BTC cycle. If you want to invest at least one BTC, there are some things for you. The PTLBTCs that expire in May are still good. I wouldn't do the March ones because we only got a couple weeks left of that, even though they look good. Entering and exiting is going to cost you more than it's worth to be in it. But the May one via Morpho can handle 8, principal BTC. So if you're throwing in one BTC, you're totally fine getting 22%. I like that one. Some good BTC yields out there is all I'm saying. Let's talk about the hype. So hype is something that I wanted to mention because everyone is like, is there going to be a hype season 2? And the answer is yes. As far as I know, from the people I've talked to who may or may not be part of the team, there is going to be a hype season 2. And previously, the way I had heard is like the best way to farm it is by staking hype. And if you don't want to stake hype because it's only 2% yield, you don't know if hype is going to be like really good, you can neutralize it. So and the cost to neutralize isn't bad. Like it's literally right now you're getting paid 50% to short hype. So if we go over here to my little calculadora, paid 50%, which is crazy, to short 1x leverage, and you're getting paid 2% on your staking, that's a 26% delta neutral play on stablecoin, effectively a stablecoin yield, and you're farming season 2, which has some value, right? We don't know what it is, but it's some value. And so, yeah, it's cool. Now, after I actually posted about this,
covering both sides of like the potential trade, right? I think like one side of the trade is that you're using the perps, which was kind of like the big qualifying factor for season 1. Mm-hmm. Number 2, you're using the DeFi, which is like the growing kind of ecosystem of hype EVM. So you can stake. There are liquid staking providers. I would imagine soon there will be opportunities for leverage staking hype, which, with a low APR may not be knock your socks off high yield. But if you can be using the DeFi, using the perps, you might be putting yourself in a good position to get a decent airdrop, especially if it's a positive carry trade regardless.
Yes, exactly right. And so I posted about this yesterday on X, Twitter, and I got this message. I'm not going to say from whom, but it was like, tips for season 2. I thought, oh, cool. Let me go around and share this. So obviously like this, in hindsight, very something you should do. Play around with Hyper EVM, definitely. Hyperswap, Kitten Swap, buy some NFTs. I guess there's some NFTs out there. So, Barachain NFTs did incredibly well relatively to their cost for the most part. Hypeo, I don't know what that is. I have a point system that will have a validator you can delegate your stake hype to. Maybe Hypeo an LST protocol? Like a liquid state hype?
I don't know. I do know that there's
a few of them.
ST hype, WST hype, and some other stuff like that. But Y hype, yeah.
There's also a lending protocol that you can loop on. HyperFi. So yeah, play around with Hype EVM. They're going to incentivize that as well. Someone else said like season 3. I don't know if that was a joke or not, but right, we're in a season currently. So if you have Hype and you're not staking it, you should be. And if you want to be farming Hyperliquid season 2 and you're not doing at least a little bit of that basis trade, maybe just allocate a tiny bit to it as opposed to like some stablecoin play. And then, if you're bored and need to click, you have a click addiction, go click around on Hyper EVM, right? Go play with all the new protocols over there and position yourself well for that airdrop. I think that's sort of, that was my takeaway. You were saying Cathie Wood seems bullish. I'm not sure if I get that from this here. Can you explain your bullishness?
This is not me being bullish. I'm just grasping at straws, trying to find bullishness in the market. And, Cathie Wood, I would interpret this as being a bullish tweet that she put out yesterday. It says, in our view, the market today is discounting the last leg of a rolling recession, which will give the Trump administration and the Powell Fed many more degrees of freedom than investors expect, setting up the U.S. economy for a deflationary boom in the second half of the year. So, I mean, it sounds like a lot of jargon and buzzwords, but she's last leg of a recession, many more degrees of freedom than investors are expecting. So there's like, the investors are kind of like pricing in a lot more negativity than there should be. And then she thinks we're going to be in for deflation and a boom in the second half of the year. So bullish conditions. So I don't know. I mean,
deflation makes me think that a strong dollar and a weak equities market, but hopefully I'm wrong. Hopefully we're wrong there. And that, the dollar is going to be strong and equities are going to be stronger somehow. I hope so.
It's Trumponomics, man. You got to believe. Okay.
You got to believe. Finally, let's end with Camino, because Camino, another sort of darling of the Solana ecosystem, if not the darling of the Solana ecosystem, has seen the pain from JLP, unreasonably so. JLP outperforming Solana by a long shot. So shout out to JLP for outperforming Solana, underperforming stablecoins. Clearly, it was it's down like 30% or something since its all-time high of 4.7ish or whatever that was. And Camino is like the de facto place to leverage this, but there's always been an origination fee, which was what do you say, 0.5% on the notional?
50 bips, yeah.
Yeah, so yeah. Pretty punitive origination fee. They have gotten rid of that origination fee, which is really nice. So leveraging now is very easy to enter and exit as long as you're comfortable with like the cost to borrow, which is the interest rate, and then the exposure of your leveraged, assets. So that's kind of cool. We really appreciate that. And of course, we've talked about the Camino.
They also increased the LTV, so that's great, right? I mean,
they've increased it as well.
Yeah, so now you can get up to 6x leverage. I don't think people are necessarily leveraging this up 6x, but it just means you have more comfortability in terms of like, liquidation risk. Buffer. And also, you say that like JLP's down. What a lot of people are doing is they're leveraging up JLP against dollars, and then they're shorting SOL. So like that's the other kind of trade that people tend to like to do is like short SOL, long JLP. Sorry?
We've seen a few widow-making plays like this where they're good until they aren't. I think the Japanese carry trade is a good example of this. It was good until it wasn't, and then everyone had to scramble to get out or get liquidated. There was also the GameStop short was a widowmaker. It was great for institutions for a very long time until it wasn't, and then a lot of them got liquidated. Then there was the Grayscale ETH play where like you had to believe that it would come back to its NAV, and you could do that, but a lot of people got wrecked with that. So like yes, you can leverage up JLP and then short the notional value in SOL. It's effectively a pair trade, right? So you're long JLP and the underlying fees associated with it, and like maybe BTC and ETH, and then you're kind of like a short on SOL. And that's been a great pair trade for a while, but also SOL has outperformed both BTC and ETH in the last sort of, let's say, the leg of the cycle. So just be careful with that. And pair trading is great, and I do think pair trading is better than like only directional trading. And it's a good way to get like a yield, I suppose. Yeah.
It sounds like someone's bullish SOL. I mean, if you think this is going to blow up, it's probably most likely because SOL would outperform JLP. I'm kidding. I think a lot of people just do this delta neutral where they're shorting a proportional amount of SOL, proportional amount of BTC, and a proportional amount of ETH. It is pretty complicated to do because, you have to kind of figure out how much the traders are holding of any specific asset and borrowing and all this stuff. But now, it has been a good trade.
Done this on Drift though. And it has, I will say, struggled to maintain profitability on this.
Yes, they have, but also they have very high fees, which I would watch out for. In a lot of
30%.
these drift vaults,
30%.
unfortunately.
Yeah, so if we go to the Gauntlet Vault, the popular one is not the in-kind, which is denominated in JLP. So it's like 51% APR on JLP. I don't know sort of how that one works, but there's the HLP USDC, which has $27 million in it at 18%. You think, okay, well, at the USDC vault, 18%, that's a pretty good stablecoin yield. It kind of nudges up the Noble, which is really a stablecoin yield. I would definitely go for the Noble Vault over this one, given the risk profile. But if you look at the View Vault, and no shade to Gauntlet, I love Gauntlet. They're a fantastic team. So if they're watching this, I like you guys. But if you look at the performance over the last 30 days, it's actually down, right? So its NAV was 1.1624 on the 8th of February. And now that we're a month later, we're at 1.159. So we're actually down. Or if you had been holding this for 1 month, you would be down on your principal. So even though the APY is a positive number, your actual realized ROI would be bad.
I think if you scroll down, it's a lot because of the fees. Like this is aren't the fees?
You can't scroll down
here. Oh, you maybe go to overview. Yeah.
Yeah. I mean, fees are crazy high. 30%.
30%
profit.
Oh, it's just profits.
Yeah.
But I think that's still
depending on how they measure profits. It could be like, well, if your notional takes a hit, like we're still going to take a 30% fee on the fees because the fees are really the profit and your principal doesn't matter. Like it depends on how they look at that.
Right. Yeah. I would imagine that part of the fees is what is causing this. And I think, the same way people talk about avoiding high fees in TardFi, I think it's also a good thing to do in DeFi.
Yes. Yeah. Do you wanna show us on movement? I mean, not show us, but like more about movement than I do.
I mean, this is an interesting project. It was a layer 2, turned into a layer 1. It's using the Move language, which is similar to like Aptos and some of these other kind of like very hype chains. They launched their token before their chain, which is kind of the opposite of what people tend to do. They tend to launch the chain, people farm the chain, and then they get the token later on, or they launch them at the exact same time. Movement launched their token first, and now that we're getting their chain, there have been these pre-deposit vaults, so stuff like EtherFi, where you could get paid 20% fixed rate for depositing ETH. There's been BTC vaults at 10%. Anyway, I think they're going to start off
where EtherFi did the pre-deposit campaign, and it was like, we're going to give you a 20 or 30%. Like it was really high number, 15%.
Yeah, exactly. It was 20. It was 20 for ETH. It was 10% for BTC, and I think there might have been a stablecoin one as well with Concrete. I don't remember what that was, but anyway, they're going to launch. I think they're going to have a decent ecosystem. It's going to be a new entrant into the young ecosystem farming game. So similar to like the Bear Chains and the Sonics, I think it's going to try to compete with that. I think that it will be, the downsides are it's not EVM, so you need to get a different wallet. I think Nightly is like one of the main wallets for this, but they do have a lot of incentives. They do seem to be quite good at playing the game. Like this is one of the major buys that World Liberty Financial has been doing. So like they have been in communication with that team. World Liberty Financial has been buying a lot of the Move token. So there's been some hype there. I think basically what I would say is the movement team seems to know how to play the game, which in this kind of market condition is probably a good thing.
I mean, hype definitely knew how to play the game. I'd say Kaido, they knew how to play the game. So if Move can play the game and they have good market makers, they have a chance of having, a decent airdrop. Or I don't know.
So that's what's coming is like the token's been live, but the airdrop hasn't for most people. And so now for people who, interacted with the testnet, who are holding stuff like Celestine Sloths, who, for whatever reason, are going to be getting this airdrop. They will be getting it hopefully soon. There is no announcement of when exactly that's happening. We have heard a lot of soon. Hopefully it happens, but they have announced their public mainnet beta, which is a bit of a mouthful. I'm not sure what the difference between mainnet, how something can be in mainnet and be in beta, but that's what it is. And they have a whole list of like different dApps and stuff that are going to be live day one. So, I'm just flagging it as a potential interesting ecosystem to keep an eye on in the coming weeks. Hopefully there will be lots of incentives. They will try to compete with Berachain and Sonic, and we can go and get lots of yields. I mean, when it's a PvE, I'm not sure I would exactly call this PvE conditions, but when there are PvE-like conditions, farmers tend to win. And so that's always great.
That's right. Okay, well, thank you for all of the alpha as always. It's good to know you are a movement maximalist. I'm kidding. And yeah, we love instead of campaigns for obvious reasons. We've seen a lot of PvP this cycle. It's good to finally transition back into what is more adjacent to PvE. Though I would say it's PvP, but not player versus player. Some of these campaigns tend to be more player versus protocol, where like, anyways, we don't need to get into the theory of that. Thank you guys so much for watching, and have a wonderful rest of your day.